the euro against the dollar, why it's a bit flat or a little bit stronger than the dollar. Well, last week, what I can see is that it started off with good reports in the last Tuesday, last week. Let me see. German zoo was quite good. So there's good positive news there. There's a slew of reports actually between the euro and the pound, even the US. So there's quite a mixed bag on reports there, quite good reports. And if you have a look at the pound, it's also quite good with the reports there. Flash GDP on the euro was quite good. And then they had the bank holiday, and then that's about it. So this week alone, they're also waiting on, there's a few major reports coming up with French flash manufacturing, German flash as well. Forecast is quite good there, so there may be good reports there as well. So that's one reason why they may be not dropping it at the moment and waiting for the result there. There's also a good indication but that overall buyers are still pretty much in control. If we look at the, start off with the monthly, last month buyers are very strong. It was dropping at one point, but then they push it right back up above the 130 and 133 now, and there could be also still more push to the upside as well. On the weekly, we also buyers are very dominant at the moment. Last week was just a stabilization phase, a little bit of a correction before continuing further to the upside for this week. So this week, 3 dojis in a row. They don't know where to go. If you have a look here, lower highs, but also higher lows at the moment. So it's in a wedge, indecision time, still waiting for direction on probably those major reports later on in the week. So that's my argument or research based on the euro against the dollar. With regards to the Aussie against the dollar, what I can see is that it has a close relationship with gold. Gold is dropping at the moment, so therefore it's also dropping. And today they also had major report on the monetary policy meeting minutes, and what I can read there is that the economy is still recovering, therefore the Aussie against the dollar, they're weakening the Aussie against the dollar. Also, I'm not sure about the Kiwi, but with the dollar CAD, I believe oil is dropping as well. So that's why the dollar CAD is doing the opposite at this point. So that's my research on those pairs.
All right, new ones to go next. Thanks for that, John, and who wants to go next? Jason, or Harry, or Dean?
Go, but I don't really have much more than what John and Ann said. It's just basically I kind of analyzed the same way Ann did, and I also looked at Market Watch just to see if there's any current news that could have been moving any of those currencies one way or the other. So basically, the only thing I really found was just looking at QE not really helping as far as the dollar goes, and then basically, what's that other? And it's pretty much U.S. stocks fall with bonds, so the bond market's taking a hit. So that could push the dollar down too and cause weakness. And then looking at net dania, I was looking at crude light as well. So obviously right now in the level of demand, so push to the downside is pretty likely to happen here. And then so look at the daily chart as well. And if you want to go down and look, it's really taking a hit on the intraday charts. So that would cause weakness with the CAD. And then we look at the dollar index. Still on the level of demand, but current candle's pretty weak as well, so it could have been based off that news. Still overall trend is still up on the weekly and then daily. Same things, a lot of indecision and stuff, and then going back to the news, as Ann already pointed out, we have some news coming in for the dollar for home sales and stuff like that, and then more major news with FOMC meeting minutes, and then more unemployment claims news for Thursday, and then new home sales as well. And so all that stuff can add to, but as far as your question goes, I don't know exactly why all of them are acting so differently from each other. And that's pretty much all I have.
All right. Cool. Thanks for that as well, Jason. Who would like to go next? Harry or Dean? Would give it a shot.
Well, I think my knowledge is a little bit in its infancy, but kind of agree with some of the stuff. I'm going to show you really. I'm just looking at the fact that you got the Dow Jones Industrial Average, FTSE 100, pretty much on par. Oil's down almost 1%. Gold's down 0.6. The report from the Australian guys today wasn't hugely negative, but wasn't overly positive. So I think it's more the fact that the US dollar is pretty much staying where it is, and the rest of the currencies are the ones that are changing the circumstance, and therefore you've got the Australian dollar dropping based on the reports, and the fact that gold's dropped on 6%. What else have we got? Euro US dollar, yen's up 0.2. US government bonds were up fraction, UK bonds were flat. US dollar index weekly trends down. I really think it's because the US dollar's not doing much, and the rest of the currencies are what's influencing the strange prices. So it's the individual currencies that are pushing the stocks in different directions. That's my take anyway.
All right, beautiful. Thank you, Dean. Last but not the least is Harry. What do you think?
I'm not too sure if I can add any more than what everyone else has said, but I'll just do a quick recap, I suppose. For the Aussie and the New Zealand, the New Zealand dollar, that went down first and probably more aggressively. It's all pretty much based around rates, interest rates, about the imminent cut that's going to happen in both countries. So it seems like the institutions are positioning themselves for lower rates and lower yields, so they're getting out of the Australian dollar and moving into other currencies. So the actual report came out in New Zealand first, and the Aussie was sort of tied to the Kiwi more so, and the Aussie was tied to its own news. For the pound and the euro, they're going the other way. Centrally about rates again. They come out and said it's not about an imminent commitment to cut rates. So institutions have decided that the currency ain't going to fall that much, or it's pretty much where it should be, or maybe it should be a little bit more expensive. So it's not moving down, it's actually going up against the dollar. As everyone else mentioned about the CAD and the Swiss against the dollar, It's the CAD equities in Canada dropped quite heavily. I think yesterday or the day before. Now the currency is obviously falling. It's also tied towards gold and silver, as I think somebody else mentioned previously. And the Swissy is a little bit different. It hasn't really popped just yet because it's obviously a euro-based currency as well, the Swiss. So they're not moving that much. Another thing that's sort of like a blanket over everybody, or over all those currencies, is the States. They're waiting on the FOMC minutes or meeting minutes that's going to come out of Jackson Hole. So whatever comes out of them, or whatever news that they're going to announce coming out of that sort of a meeting, I suppose, or conference, is going to determine where the dollar is going to go overall. So that's why it's a little bit fractional at the moment. It's really going to local news, but coming out of Jackson Hole, it's going to be a blanket news announcement, and everything will start moving once again. Other than that, I don't really have much more to add based on that question.
Hello, Ray. Can't hear you.
He might be on mute.
Oh,
Ray.
there you go. Yes, you're absolutely right. Well, thank you guys for your answers. So just to recap, so the question was earlier, why is the Aussie, the Kiwi, the Swiss, actually no, Aussie, the Kiwi way weaker against the US dollar? The Swiss also was a little bit stronger. Euro a little bit stronger, the pound currently flat, but the dollar against the CAD is just way too strong. Alright, just to recap first, the Aussie and the Kiwi, obviously the number one answer was this. It was based on the monetary policy meeting minutes, what occurred over there in the Royal Bank of New Zealand, where Governor Wheeler basically spoke. So obviously whatever they stated wasn't in terms of the effect within the masses and based on mass consciousness, created a lot of fear, which then led to the drop of the Aussie, bam, and then the Kiwi, which is currently more than 1% currently. So at the dojo, we are basically right in terms of our forecast, in terms of shorting. So if you actually shorted, wow, then well done. Either the Kiwi or the Australian dollar. Okay, so we stated that they may continue to drop, and back to level demand around this level is highly probable, right? All right, so those are the two things. Okay, now the other part now is looking at the dollar index, which you basically stated. All right, the dollar index, as you would know, is simply the weighted. No, it's actually not the weighted. It's just it's the weighted index based on the 6 major currencies. Euro being the biggest, so if you just simply, go through part of your dollar index, you have Euro close to 58%, so 57.6, the Japanese yen 13.6, pound sterling 11.9, Canadian dollar 9.1, Swedish krona 4.2, Swiss franc 3.6. Since we don't really trade the Swedish krona, notice how the dollar is a little bit weaker than the Swiss franc, which is only basically 3.6, but the Canadian dollar, which is actually stronger currently, was based on gold and was based on oil in terms of what your answers basically stated earlier. So Swiss franc, pretty much, well, the year in London pretty much just opened. Frankfurt's about to open in the next 8 minutes, so you're going to see a little bit more of a tick pretty soon. So part of that, now within the euro being 57.6, just reflects in terms of the actual price itself. And you can see here we have a doji, and at the same time with the euro also pretty much on doji. So it just reflects in terms of the price, the other 40 out 70%. But of course, euro being 57 doesn't, I mean, it's also compromised with other 17 European countries, right? So that affects basically the economy of the euro dollar. Right, so part of that, being uncertain, they don't know whether it should go up or down. But if our viewpoint is that the probability that it could come back up, being bullish, then it will follow suit afterwards. So we also basically stated that certain reports as well coming out. We have the euro, which in actual fact the PPI through there to 11 o'clock. Negative 0.1, but there's no effect. It was pretty much neutral, it was flat. The next one will be tomorrow, the French Flash Manufacturing PMI, Purchasing Managers Index, or if that's also going to be weak or whatever, the dollar also will happen, then you can obviously have the inverse correlation part of that. We have existing home sales and Wednesday. Actually, today's only Monday, being Tuesday. So the Fed's talking on Wednesday. So technically speaking, tomorrow there's really nothing happening. Hence, part of the uncertainty aspect. So to answer the question based on today, it's simply based on those two reports. Gold. What did gold do? Currently dropping. And also oil currently dropping. But the funny thing though is that the Canadian dollar is, which makes sense, so the Canadian dollar is weaker based on oil, based on gold. Aussie, aside from the report, gold is also basically dropping. So that's pretty much it. Any questions? So it proves once again that it's in regards to news is a big factor, whatever it's happening, and the rest is based on commodities that also reflects, and the dollar index, which is also going to be one of the biggest basically, especially with the euro or against the yen, right? So everything has their own relationship, and hence sometimes it doesn't want to go the way it should go, and the reason for those is simply news. That's why news is a very important factor. So when you're day trading, you got to be careful. So questions in terms of today's exercise. So what did you learn basically today? Let's start from you, John.
Well, going back, I actually learned a lot from the conversation with Jason about the 1% and just the overall philosophy with regards to risk. I thought that was pretty interesting. I've got more questions about it, but I'll hit you guys up on Wednesday with regards to that. With regards to usable margin and stuff like that. Tonight, I wasn't really confused, but just didn't really know where to start when you started on this exercise, and then I kind of found at the very end I started putting it together. But yeah, I learned a lot from that. Just kind of building on the overall picture with regards to including commodities and news and all that stuff, and just fine tuning that. That's it.
All right, good. Jason.
As far as just the learning points, yeah, I mean, it's kind of a difficult question because you got to take each individual currency and then analyze what it's doing compared to others. So yeah, it just takes a little bit more due diligence, but yeah, I mean, overall it's a good exercise. It's important to know because it affects the direction of your trades, right? So you need that little bit more news or due diligence before getting into a pair, and it's good to know things like this. So yeah, it's good.
Nice. All right, then doesn't mean then that when you're analyzing you need to go automatically just straight to the chart.
No, because the news will affect the movement of the price. So you have to know. Yeah, it can be a setup to go short, but it might not want to. Price might not want to move down to the downside because of news. So you have to be careful.
All right, beauty. Nice. So in other words, macro fundamentals are important once again. Harry, your turn. Thanks, Jason.
Yeah, hi mate. Oh, I sort of forget to look at that sometimes, you know. It's probably one of my big things to do, you know, pretty much every day. So I sort of get away from it a lot as well because I am so much into it. But I've got to sort of go back to it and really connect it to what I'm doing during the day, both morning and in the afternoon.
All right, perfect. Thank you. Dean?
Just sort of have a lot to learn. Need to get back into looking at the news and all the indices and the whole market picture.
Nice. All right, any questions for me?
How about me?
Nah, just
Forgot about me again.
How about you, Anna? What did you learn today?
Forgetting about you.
For me, it just confirms the importance of the 5-step process, starting from the macro fundamentals. Very important. Start from step 1 before even pulling the trigger.
All right, perfect. Excellent. Any other questions, and queries, challenges before we wrap it up?
No questions.
Awesome.
No questions.
Great, guys. You have a good one. We'll see you then. Bye,
Okay.
guys.
See ya. Bye.
Over and
Thanks,
out.
everybody.
Ciao.
Bye.